Good morning. These are the things that matter most for the U.S. pre-market. CoreWeave is forcing Wall Street to test the AI build-out again. Nvidia's power architecture puts electricity back into the trade. Oil risk is still tied to Hormuz and the Red Sea, and CPI positioning is no longer one-way bullish. The central question for Wall Street is simple. Can the market keep rewarding AI demand if the hidden costs are power, financing, inflation, and leverage? Start with CoreWeave. CNBC reported that the AI cloud company surged in pre-market trading after a cleaner quarter, with second-quarter revenue doubling on hyperscaler demand. MarketWatch also reported that Supermicro rallied after results, and Investing.com highlighted Nvidia's 800-volt direct current architecture and the power infrastructure stocks that could benefit. The cleaner side is Nvidia, CoreWeave, and Supermicro if demand is being confirmed by revenue, servers, power architecture, and data center spending. Pressure sits with AI names that only have the label but cannot show utilization, power access, margins, or customer payback. For private investors, the useful filter is not whether AI is popular. It is whether the proof chain is moving from chips to servers to power and into cash flow. Second, the hidden macro layer is that AI can be inflationary before it becomes deflationary. CNBC reported that AI's costly build-out complicates the Fed's inflation fight because slow adoption and heavy data center construction can keep pressure on power, equipment, and capital spending. MarketWatch cited a fund manager saying AI capital expenditure could reach $1.6 trillion next year. That turns the AI trade into a rate story as well as a technology story. Winners can include Nvidia, Broadcom, Supermicro, and power infrastructure beneficiaries if spending stays disciplined. Pressure sits with companies that need lower rates to justify distant profits. The private investor takeaway is to watch Treasury yields and power cost language alongside earnings beats. If yields rise on the same day AI stocks rally, the market is telling you the trade has two sides. Third, oil and shipping risk remain live. CNBC reported fatal attacks in the Red Sea and Gulf of Oman, and said the IEA expects oil demand destruction as high fuel prices and Strait of Hormuz disruptions weigh on consumption. Investing.com reported Wall Street futures were higher with CPI data and Hormuz risks in focus. The cleaner side is energy exposures such as Exxon and Chevron if supply risk stays priced. Pressure sits with airlines, transports, and consumer margin names if fuel costs rise again. For private investors, the key mechanism is transmission. Oil can become an input cost story, an inflation story, and a rate expectation story in the same trading day. Fourth, the underappreciated story is leverage and positioning. MarketWatch reported that Citadel Securities sees leverage potentially building again after calling the stock market reset. Yahoo Finance reported a Tesla compensation story that keeps governance risk in the spotlight. Those are different headlines, but the same market question. Is risk being repriced carefully, or is leverage rebuilding while investors chase the strongest themes? The cleaner side is companies with cash flow, pricing power, and balance sheet flexibility. Pressure sits with crowded momentum, governance-sensitive stocks, and any group priced for perfect data. The private investor filter is to separate strong fundamentals from fragile positioning. Here is the stock-led watch list. In AI proof, watch Nvidia, CoreWeave, and Supermicro. In the AI power and rates test, watch Broadcom, Eaton, and the Nasdaq 100. In oil transmission, watch Exxon, Chevron, and United Airlines. In positioning and governance risk, watch Tesla, JP Morgan, and Goldman Sachs. Market bias, constructive, but more selective. The bullish version is that AI earnings confirm real demand, power infrastructure expands without pushing yields higher, oil risk stays contained, and CPI does not force a rate shock. The mistake to avoid is treating every AI headline as automatic proof. Today's better filter is company group confirmation, revenue conversion, power cost, yield reaction, oil transmission, and whether leadership broadens beyond one crowded theme. That is the U.S. pre-market brief for Wednesday, August 12th. I will be back with the next brief before the next open. Research context only. This briefing is not investment advice, not a trading recommendation, and not personal financial guidance. No targets, stops, sizing, or portfolio instructions are provided.